Hello Trade Pros, it's Victoria from TRADEPRO Academy, and we've got another options video for you. And in today's video, what we're going to be talking about, as you can see on my screen, is going to be the options chain. Now we're going to be using the options chain from Interactive Brokers here today, and we're going to be breaking down how to use the options chain interactively on Interactive Brokers for beginners and more intermediate traders. Now we're going to go through a lot of the steps of what you can find on the options chain, how to click and add positions, take away positions, whatever that may be. Now, what we're going to be doing today is just breaking down each step of the way and comparing it with one of the stocks that we had in question today with Apple. So I hope everyone enjoys this video and hits that like button, hits that subscribe button, and drops a comment down below. Do you guys actively use the options chain? What do you use the options chain for, and how do you use it? So let us know down below, and why don't we get right to the intro, and we'll see you guys after that. So welcome everyone, I hope you enjoyed that intro, and what we have in front of me here on the screen is the Interactive Brokers options chain. Now you can see we're on the sim mode, so I don't click anything and get into a position that I regret doing because we have the rapid trading on our friend here on Interactive Brokers. Now, what we can find on the options chain can be split up into different categories. Now you can customize the options chain as you would like. You can add the Greeks, you can add other Greeks, you can take things away. I'm going to show you guys how I have mine set up, what I look for, how I use it, and what can be broken down in the options chain. Now, in the column that's labeled strike here, you can see pretty clearly we have the strike prices of the option. Now, these are the strike prices that we select, right? Whether they're more out the money for the calls or more in the money for the puts, or out the money for the puts, in the money for the calls. And these are the strike prices that we can choose for our options trade, right? So these are the anticipated prices that we expect the option to expire into, right, ideally. So if I select a 160 strike, depending on the expiry, I'm expecting Apple to expire above that area if I'm going long. Now, we can divide the columns on Interactive Brokers into two, right? We can have the call side here on the left, and you can see highlighted is all the price below the current level. You can see what Apple is trading at right now, just around 153.96. So anything below that would be considered in the money. It's going to be highlighted in blue. Now on the right hand side, we have the puts here, right? And anything highlighted blue is going to be above the current price because those are going to be in the money, right? And then everything in black is out the money for puts and calls. They're diagonally, right, placed here on this options chain. Now, what you'll notice, the next step that we have to break down on the options chain is we got a bunch of different expiries. So what I have selected is the weekly here that expires in 2 days on Friday because I was day trading Apple today. And we can see that based on the weekly, we're going to do a little more analysis of what we saw today. Now, we also have different expiries that we can choose from. A lot of them are weeklies here. If we select more, we can choose down to the monthlies, which are highlighted in white, and the yellow highlights are the weeklies. Now, notice that the monthlies come before the weeklies, right? So not until we get deep into December are we going to see the January weeklies show up and populate the options chain. Now, you can select the weeklies and quarterlies down here so you can actually see them. And with that, right, we can select any strike that we want, right? We can select any expiry that we want and see what's in store there. Now, the other aspect to the options chain here is that we have the IV up here. So the IV is going to be the implied volatility of the underlying asset. Now, you want to know what the general IV for the assets that you are trading are, because if you have an inflated IV, then maybe you don't want to necessarily day trade that asset, because if the IV drops, that means that the asset price will drop. If you want to learn more about IV, more about the Greeks, more about all that good stuff, just let us know, and we can make multiple videos just explaining the basics of Greeks and how we can use them to our advantage for both swing trading and day trading. Now, to continue with what else is on the options chain before we kind of dive in a little how to use it with an example here on Apple is a few columns. Now, if we right-click the top here and configure layout on Interactive Brokers, you guys can see that we have a plethora of different things we can choose from, right? If you go into Greeks, you can see what Greeks you can add here. Now, if you notice on mine, I've only got volume, bid, ask, options, open interest, and delta, right? I'm not necessarily too concerned about the other ones unless I'm swing trading, then I'll add them for a split second and take them off. So what we got here is volume, bid, ask, options, open interest, delta. Same thing for the puts. So on the call side, right, it's the volume in that specific strike for that expiry. So you can see there's some strikes right here with very heavy volume. Now, it's going to be important to understand how the volume works throughout the day, right? It's a part of reading the options chain, very similar to reading a DOM. So if you start to see that calls get populated, right, or puts get populated, then that could infer that there might be some activity or movement in and around that options chain, right? So for example, today the 152.50s and the 155s were getting populated very heavily. Now, yeah, they could be sellers, right? But there were other indications like the chart volume that were indicating that, you know what, these are probably buyers. Order flow, to mention some, right? These are probably going to be buyers of this strike, right? Of these areas. So the volume, you can see if you hover over it, native volume data does not update with every tick, but include delayed transactions, bust, late reported trades, and combos. So it's not going to give you, okay, these are buys or sells, but what it's going to give you is the amassed volume for that one specific strike and expiry. Now, the bid and the ask, right? The ask is if you want to market buy, right? This is typically how you get into a trade, right? Now, there's a difference between the bid and the ask. Now, the bid and the ask, right? The difference is called the spread. So if you buy at the ask or above the ask, you're technically going to be down the second you get in what the spread is. So theoretically, when you want to get into positions, you want to bid into them, right? You want to limit into them, and you want to limit ideally below the bid or the midpoint if it's a wider spread. Below the bid doesn't guarantee an entry like if you click the ask and you get in, but it guarantees a better entry than where it's at right now. So I highly recommend for trading, you don't get in at asks, right? You get in slightly below the bid. That's where you want to put those limits in. Now, typically, the ask is what the seller would want to sell it to you for. And the bid is what the buyers, like you and I, if we want to go long, are trying to buy it for. Now, realistically, it's not going to happen, right? I'm probably not going to be able to buy it at 183 if someone wants to sell it at 186 because they have the power in that circumstance. Now, you can see if I hover over them, they're going to be highlighted blue and red. Now, if I click blue, that means that I'm going to be buying said option. If I click red, I'm going to be selling said option, right? Because if you're hitting bids, you're selling it, right? If you're lifting offers, right, you're buying it. So the next we have is the open interest here. The open interest is slightly different from the volume, and it's the open total contracts that we've got here on this guy, right? On Apple at this strike, at this price. So we can see open interest is extremely heavy at 155, but you can see volume is very heavy at 155 and 152.50, right? But the open interest is very heavy at 150 here. So a lot of open contracts with not as much volume as these guys. So the idea is I typically want to see very, very heavy volume that overweighs the open interest because you know that there's going to be some big money participants that are in these contracts. And then finally, the last thing that I have here is one of the several Greeks, right? We've got delta, gamma, theta, and vega, right? And I just have the delta here, so I know what I'm getting myself into. Because if I'm day trading this, the delta is going to be important. If you can see, right, a 2-day to expiry, the difference in the delta, 73 to 33, that means that for every dollar move, this 155 is only going to move $33 per contract, right? While this 152.50, which is one strike away in the money, is going to move $73 a contract. So looking at this, right, the deltas are going to get closer to zero the closer you get to the expiry and the further out they are of the money. You can see there's about a 20, right, delta difference here between these two, and they're both out the money and they're very close at the money, right? But 157 is very high up on the actual stock chart. So the odds of it expiring there in 2 days are very, very slim. And that means that the delta is going to be very, very low. So when you're day trading, you want to make sure that the delta is around 30 plus, especially into closer to expiry, because you can see the difference between the prices for the 155s and the 152.50s, right? 180 or 50. Right? So these huge differences tells us that maybe I want to play in and around the money. So with that, right, you can take those principles and apply them to the put side, because the put side has a negative delta. Now we can talk all about these Greeks, but this is a very basic intro of the options chain and how to use it. Now, especially for day trading. So day trading on the options market, right? If I have my chart here of Apple, now we had this as a live trade here in our live trading room today. And what we were doing was we noticed a very, very interesting bull flag that shaped up on Apple. Now, not only was the bull flag shaping up extremely well, but we were getting very heavy volume to the upside, and we were getting, right, a ascending trend that held these averages. So through this area, we were identifying, okay, we want to buy the 152.50s. Why? The 152.50 calls here. Let's put this over here somewhere. The 152.50 calls, right? Because we saw that the volume was getting super, super aggressive in and around these areas. The 152.50 calls at this point were in the money, right? But they were getting super aggressive. They were buying them a lot. Order flow was telling us that, boom, they're just hammering this strike like crazy. And it seemed like a pretty good risk to reward. At that time, there were $95 a contract. Now, you could have waited to see the break of this resistance point, right, for the aggressive push, which would have cost you probably about $1.15 from the 95. But we saw on the options chain that the volume was getting fat. The open interest was increasing, but the volume was increasing with a drastic pace. That means that they're really, really layering into this, and the price of the chart looks good. The volume looks good. There's a more anticipated move to the upside. The order flow was indicating upside, upside, upside. So it was worth a shot even a little lower to get a better entry. Now these ran, I think, about 200%, if not 150%. Now, I cut them sooner than that. I didn't capture this whole move from low to high. That's just impossible. But we got them in the room very, very well for a minimum 85% on this whole move. So the thickness of the options chain and how they worked, right, is very, very important for day trading. If you're watching volume and if it starts to bulk up in the first 30 minutes of the day, it's something to watch for, especially on which chain you're looking for. So obviously order flow helps with that, so you don't have to do the grunt work and you can identify those opportunities yourself. Now, if you want to see more series on order flow and more on the options chain and how we trade with it, just let us know. But this was a breakdown of the options chain, how we like to use it, what I have on mine, what everything represents. And to wrap this all up, we do have a free Discord room to invite you guys to, community.tradeproacademy.com. The link is in the bio. I want to see you all there, where we talk about educational stuff like this all the time. And we give trade ideas, right? We give trade ideas like this all the time throughout the days. Now, today on our free trading room, we had a few trade ideas, and we can break them down for you. How did they move? How did they run? So what we had pre-market here, we had, let me just pull this up for you guys so you guys can take a gander at it. You can see HD, right? Netflix above the all-time highs, and we're looking for AFRM. Now, AFRM was another great play that ran over 80% today, and we can break that down. So if you guys want to check out trades like these, like options trade and also futures trades and futures plans, go and check that Discord out. Look at AFRM before we head off here. AFRM, what are we doing? We're getting the breakout of this, right? If you want to see the live trading room snippets, go to our Twitter, right? TradeProAcademy.com. They're going to be posted there. We identified the breakout of this and we took the trade as a team in the trading room, and this thing ran almost 90%. So if you guys enjoyed this video and want to learn more stuff like this, if you enjoyed that Discord, go check it out. Drop a like, hit that subscribe button if you're not already subscribed, and we have something big coming for everyone on YouTube and also all of our traders on Discord. So stay tuned for that, and we'll see you guys soon.